Hello everyone, welcome to the Warrior series of BFM. In Warrior series, as you know, we are covering all the numericals, objective questions, case studies, MCQs of PYQs, previous year questions. So follow the series till the end. Watch it, watch every minute of this. Watch for all the lectures, all the subjects. Subscribe to the channel, click on the bell icon. Today we will be covering some important previous year questions, objectives, one-liners, okay, but very important ones. Which is the first IFSC in India? First IFSC. The GIFT City, Gujarat is India's first IFSC. Visakhapatnam Special Economic Zone is India's first IFSC. Jawaharlal Nehru Pharma City, Ramki Pharma City Private Limited is India's first IFSC, and none of the above. So which of them is the first IFSC in India? Answer is comments, everyone in the comment section. The answer is GIFT City, Gujarat. Okay, it is the first IFSC. Got it? What is a IFSC A in IFSC centers? What do you mean by this IFSC A? Indian Financial Services Centers Authority. A. Option A is this. Option B. IFSC A has been established with a as a unified regulator with a holistic vision in order to promote ease of doing business in IFSC and provide world-class regulatory environment. C. Objective of IFSC A is to develop a strong global connect and focus on the needs of Indian economy as well as to serve as an international financial platform for the entire region and the global economy as a whole, and all of the above. Think, is it only A or is it ABC? There are only two options, either A or all of the above. So it is all of the above. Okay? All of the above. Consider the following statement regarding International Financial Services Center Authority, IFSCA. So some more details about it. It is very useful in your module A. Okay, you will definitely get some questions on this. It is a unified authority for development and regulation of financial products, financial services, and financial institutions. Okay, development and regulation of financial products, financial services, and financial institutions. The Government of India under IFSC Act 2019 established it. Mumbai is the maiden International Financial Services Center in IFSC. Choose the correct option. 1 and 2, 2 and 3, 1 and 3, 1, 2 and 3. So you want a correct one, huh? Yes? 2 is obviously correct. See, first option is 2 is correct. So this is true. Now wherever there is an option without 2, remove that out. Okay, so 1 and 2, 2 and 3, 1, 2 and 3. Now what about this? Mumbai is a maiden financial service center in India. Is Mumbai the maiden financial service center? Which is the only financial service center, IFSC today? Yeah, it is not Mumbai. Kindly note, it is not Mumbai, it is Gujarat, Gandhinagar. So this is false. So 3 is false. So remove all the 3. So what remains? 1 and 2, isn't it? It is a unified authority to develop for development and regulation of financial products, financial services, and financial institutions in IFSC. It's not throughout India, it's in IFSC. Okay? So 1 and 2 are correct. What are the major activities of IFSC? Fundraising services for individuals, corporates, and governments. asset management and global portfolio diversification undertaken by pension funds, insurance companies and mutual funds, wealth management, all of the above. This is an explanation given. So which of them is the correct answer? Quite obvious. See, these are all informative questions. These are useful to you. You just take this as a learning part. All of the above, right? Everything is done over here. Fundraising is done. AMC, asset management is done. Wealth management is done. All of the above, right? Clear? If a company is functioning outside India, needs funds to meet its working capital requirement. So a company is functioning outside India, it is needing funds for its WC, working capital. In that case, the company can avail of banking services in form of loans, overdrafts, or any other financial services through bank outside India. Here the residential bank of abroad shall be giving its services to that company. Therefore, the transaction between them is said to be a part of international banking activity, import, export, exchange. Question is very big. Understand the question first. There is a bank, a company is functioning outside India. Okay, so there is a company X. Okay, it is requiring some funds for working capital. So who is providing the funds for working capital? Here the residential bank of abroad shall be giving its services to that company. Residential bank of abroad means some foreign bank. Okay, so that bank is giving some funds to this. So foreign bank. Okay, it's simply foreign bank. So therefore this transaction is called as what? What is this? Import, export is out, exchange is out. It's a foreign country. Foreign bank is giving loan to some foreign company. International banking facility. Okay. Even this can be your Bharatiya bank, Indian bank, which is stationed outside, means SBI New York. Like that also it can be. Okay. So this is simple. Got it? The market risk arises on account of transactions reflected in. So where is the market risk? Is the market risk in banking book, trading book, banking book and trading book? Banking book, trading book and off balance sheet exposures. So where do we have the market risk? Do we have the market risk in banking book and trading book only? Or do we have it in D, banking, trading and off balance sheet? What do you think? Comments. Let me see in the comments. What is the answer? The answer is trading book. Banking book never has the market risk. Banking book, see, it has, but RBI doesn't consider it up till now. Why? Because we are not selling the bonds. Understand the difference between banking book and trading book. In banking book, what do we do? Banking book, kindly note. Banking book means we purchase the bonds for compliance purpose. We purchase the bonds for compliance purpose. Compliance means CRR, SLR, right? For that we purchase. So those bonds cannot be sold till maturity. These are all held to maturity, HTM bonds. These are all held to maturity. So if I am holding any bond to maturity, where is the question of what is the price of that bond? The question of price of the bond arises when you have to sell that bond before maturity. If I purchase some bond today and I want to sell it after 1 month, maturity is after 3 years. So that will be subject to market risk. Okay. Now trading book. Trading book is book that is called as proprietary book. Proprietary. Proprietary means what? For profit. Proprietor. Let's write this much only. So here we have two types of securities, that is AFS, available for sale, and HFT, held for trading. These securities are there in the trading book. That's why banking book will never face any reflected in banking book will never face any market risk. because there I am not selling. See, it's as simple. I'll give you one more example. You are staying in, let's say, some flat, some house, any house. Okay. Tomorrow, if I come and tell you that, see, the cost of this house when you had purchased was 10 lakhs. Now it is 1 crore. Sell this flat. Will you sell that flat? You are staying there for many years. You will not sell that flat because that flat is not for sale. That you have kept it as your own residing. That is the banking book. Now imagine another case. You have one more flat. Here you are staying and now you are having one more flat for investment. That you had purchased 2 years back for 10 lakh rupees. Now the cost of this flat is 60 lakhs in 2 years. Now if I come and tell you that sell that, you will be ready to sell that because you are not staying there. That is for trading book. This is the banking book. Got it? Difference? Banking book is always kept till maturity. Trading book is always there for sale. Okay? Got it, everyone? Read this. Which of the following is true with respect to risk mitigation? It reduces the downside variability in net cash flow. Risk mitigation, understand first risk mitigation. What is risk mitigation? Mitigation means reduction of risk. Okay. So, it reduces the downside variability in the net cash flow. Risk mitigation can also be done through diversification. It reduces the risk by reducing the probability of it occurring. Okay. And all of the above. So, what is true about? See, read the question properly. You want true. What is true about risk mitigation? Let's go one by one. Okay? It reduces the downside variability in the net cash flow. It reduces the downside variability, means it can reduce the downside in the net cash flow. Okay? Risk mitigation can be done through diversification. I can do it through diversification. It reduces the risk by reducing the probability of it occurring. Reducing the probability. Now this is true. See, risk mitigation is not about reducing the probability. The probability is there for that event. Okay? It's like the flood. Flood might come in my city. Okay? So can I reduce the probability of that? No. What can I do? I can safeguard myself. Right? Same thing over here. So the probability of any failure, tomorrow if dollar crashes, do you have means can you do anything against it? What you can do is you can safeguard yourself. So this is wrong. Probability of occurring can't be done. Okay? It reduces the downside variability in the net cash flow. It will reduce the downside movement. It can't, because if something goes wrong, it has to come down. Okay? So this is also not true. What is true is this: risk mitigation can be done through diversification. For that, so that it doesn't come down, my portfolio doesn't come down, my funds don't come down, I'll have to diversify, isn't it? And use the derivatives. Derivatives are one of the important tools for risk mitigation. There are two important ways of risk mitigation. One is diversification and second is derivatives. Okay? The Reserve Bank of India permits Reserve Bank to invest the reserves in the following types of instruments. So RBI Act basically. The RBI Act permits RBI to invest in following types of securities. Where can RBI invest? Deposit with the Bank of International Settlement and other central banks. Means RBI can invest in BIS, Bank for International Settlement. Basel Bank. Means this is in Switzerland. Okay? So deposits with BIS and other central banks. Federal means all the central banks of other countries. But see here, other central banks means it doesn't mean any central bank. Tomorrow if I say invest in central bank of Pakistan, invest in central bank of Sri Lanka, you won't. Depends on the rating of that company also, rating of that country also. Okay? Deposits with foreign commercial banks. So this is true. Okay, this is true. It allows. Deposits with foreign commercial banks. So RBI can keep the deposits with foreign commercial banks. Standard Chartered, Citibank, HSBC. Can it put? Yes, it can. It can. Okay? Debt instruments representing sovereign or sovereign guaranteed liability. Sovereign means what? Sovereign means government. Sovereign means government. Okay? So government representing government or government guaranteed liability of not more than 10 years of residual maturity. Not more than 10 years. Whenever RBI invests in any government bonds from outside countries, maximum tenure is 10 years. You can't invest beyond 10 years. Okay? So, this is also true. So, the answer is all of the above. Okay? RBI can invest in these three. In fact, there are others also. But the options given here are these three. So, only these three we'll consider as of now for this part. It doesn't mean only these three. RBI can invest in other investment tools also. Okay? So, BIS or other central banks deposit with foreign commercial banks not more than 10 years. Okay, with sovereigns. Which of the following is not correct regarding OTC products? Which of them is not correct regarding OTC products? OTC means over the counter. So, which of the following is not correct regarding OTC products? The derivative products that are indirectly negotiated and obtained from banks. OTC means over the counter. What do you mean by over the counter? Here only bank and a customer, these two are involved. So kindly note there are two types of transactions. One is OTC and second is ETC, exchange traded transactions. Over the counter exchange traded transactions. Here only two parties are there, two parties. Okay, buyer and seller, buyer and seller. Here three parties, buyer, seller and exchange. Okay. So the derivative products that are indirectly negotiated and obtained from banks, which are indirectly negotiated and obtained from banks. These are mostly used for hedging the underlying risk, hedging, okay, reducing the risk. The price is quoted by the bank, all A, B and C. So which of them is not correct? The question is not correct, okay. So derivative products regarding OTC that are indirectly negotiated and obtained from banks. Indirectly quoted, okay, indirectly negotiated. These are mostly used for hedging the underlying risk. The price is quoted by the bank. So which one is not correct over here? Hedging the underlying risk. So this is true. Okay. Then the price is quoted by the bank. Bank will quote the price. Obviously, if the customer is okay with the price, he will buy that derivative. If it is not okay, he won't buy. So true. Only this is false. Why? Because indirectly. These are directly purchased from the bank. That's why I am saying we are having two parties over here, buyer and seller. Bank, buyer is a customer, and seller is a bank. Okay, seller is a bank. Got it? So it is directly negotiated and purchased. It's not indirect. Got it? Clear? Now, before going, everyone kindly note, join the Adda 24/7 new classes which have come in. ACE batch. Okay? ACE batch. Just now it's in the starting phase. Join the ACE batch for CAIIB for this December series. All the numericals, objective questions, case studies, everything is covered. You get ebooks, mock test, online live classes, recorded sessions. That is also done. Mock test. Mock test are to the level of chapter wise and also full length. Full length means complete, like the exam. So you have 10 mock tests which are full length. Ebooks. Ebooks are chapter wise, per chapter. Okay, so join this, and mentors are very seasoned mentors. We all have more than almost 10 to 12 years experience in banking and teaching. Okay, for JAIIB and CIB. Put the code Y432. See this, never forget this code Y432. 80% discount plus 1% extra, 81% through the app. 1% you will get by downloading the app. So 81% discount. Good one. Huge it is, isn't it? I have just calculated, it is less than 12 to 13 rupees per day. So less it is. Also you can join the Increment Mahapack. See this, CIB Increment Mahapack. In Increment Mahapack, you are getting 15 plus batches per subject. Plus you are getting physical books as well as ebooks for question bank. Plus you are getting formula bank, physical, they are delivered at your home, plus ebooks also. Plus you are getting study planner, plus this triple validity. You buy for 5 months, you get it for 15 months. Buy for 9 months, you get it for 27 months. And 15 plus batches per subject. Huge it is, huge. And look at this. Again, the code is same, Y432. Okay? 81% discount, triple validity, 15 plus batches per subject, formula bank, question bank. It's a win-win situation. Join it ASAP. Okay? Bye everyone.